Hey guys, welcome back to RWM Finance, and today we are going to be discussing long-term investing. While reading the book The Intelligent Investor by Benjamin Graham, Graham states, a long-term investor is the only type of investor that there is. If you aren't investing for the long term, then you are not giving your investments the opportunity to grow as much as they can. So if you haven't subscribed, please scroll down and click that subscribe button for me, and we're just going to keep rolling. Warren Buffett calls The Intelligent Investor by far the best book on investing ever written. And the book itself looks like this, alright? And I have the link for this book and a lot more in the description bar below, so make sure to check that out. Well, as I stated in my video over Warren Buffett's investment strategies, Warren's favorite holding period for a stock is forever. Warren and Graham had quite a few things in common when it came to both of their investment strategies. In fact, Graham was actually one of Warren Buffett's mentors. Something that the rich do is plan, but they don't just plan for tomorrow or next week or next month or even next year. They plan for 2 or 3 generations ahead, which is why Warren's favorite holding period is forever. He's not just thinking about his next Saturday night out with friends. He is planting a seed that will grow to produce generational wealth. In my video over what is investing, I share with you the 3 things that you can do with your money. You can save it, you can spend it, or you can invest it. Now, when I get into the talks about investing, I also share with y'all a little bit of information about compound interest and how it can help grow your investments. I share with y'all an example on an investment that is an ETF which tracks the S&P 500 index, and how over time, with the help of compound interest, it grows exponentially. It starts out as just a $40 investment and grows to be a $2,526,696 investment over the course of 50 years of consistent investing. Now, I know that is the effects of compound interest, and this video is supposed to be over long-term investing. But in order for me to show y'all why y'all need to invest for the long term, I need to show you the helpful tools that benefit you when you do invest for the long term. In fact, the more you actually trade an investment, it can wear away your returns just like rubbing sandpaper on it. It's just going to rub it right off, rub it away. You're not going to get the same returns you would if you stop trading it. Buying and selling stocks can cost you 2 to 4% or 4 to 8% for a round trip buy and sell transaction. That is just one way that trading can wear away your profits. Another way trading eats away your profits is whenever you trade instead of actually invest. When you trade, you turn long-term gains, which are taxed at a maximum capital gains rate of 20%, into regular income, which is taxed at a maximum rate of 38.6%. So if you were to add all of this up, a stock trader would need to gain at least 10% in order to just break even on buying and selling a stock. Now, after hearing all that, I hope that y'all understand how great and how beneficial long-term investing can be for you, and how the more you trade your stocks, the more you wear away your profits. But don't go anywhere because we still have more to discuss. What we're moving to now are the 4 pillars of long-term investing. Okay, so the first pillar of long-term investing is diversity, which acts like the scales in a portfolio. It provides balance. It can provide a buffer against mistakes in assessing value because nobody gets it right every single time. A well-balanced portfolio should be designed to withstand the unusual loss. Like I said, nobody is perfect. We're all human. Your portfolio will have times when things are going great and times when things are going bad. That's all just a part of investing. I know that I have said this before, but diversification is a risk management technique. To put that more simply, don't put all of your eggs in one basket. But another thing is not to put your eggs into too many baskets. You have to find a good balance. So our next pillar is time. Time applies to the other three foundations, which gives you the best chance for success. Every market has suffered downturns over the years, but the golden rule for investors is to not get caught up emotionally in the fear or the greed cycle. If you watch my video over Rich Dad Poor Dad key points, you might remember that one of those key points was to not let your emotions control your thinking. This is a key point that you should really take seriously because emotions and investing are not a good combination. Now, our third pillar is quality, because quality assets that are expected to provide higher returns relative to their risks are the ones that you should be looking for. Quality companies should have a sound basis to their operations and growth. Now, this might mean that they take some time to deliver. I mean, Rome wasn't built in a day, and Amazon wasn't as profitable when they first started as they are today. But the sound basis to their operation and growth was always there. So when finding companies like that, they might not be profitable for a little while, but it will come. Now, our last pillar is value. Value and quality don't always go hand in hand. Quality stocks may trade at such high prices that they offer low value initially. The focus is the expectations that they will be around for a long time and not just a good time. I feel like this last pillar really just kind of makes everything come full circle when discussing long-term investing. Warren Buffett's favorite holding period is forever. So, like the last pillar states, we need to find companies to invest in that are going to be around for a long time and not just a good time, if we're going to invest for the long term. As I stated earlier and in a previous video, someone is sitting under a tree today because someone planted a seed a long time ago. Investing for the long term is a lot like planting a tree. It starts off small but has the opportunity to grow to be massive. You just have to take the first step and plant that seed. So, when are you going to plant yours? Well guys, I hope you enjoyed this video. If you did, scroll down, give it a like, and subscribe to the channel below. Also, if y'all have any questions, please leave those down in the comment section and I will personally try and respond to all of them. Follow us on Instagram at RWM FINANCE. Also, remember to check out the list of books in the description bar below. Another thing to remember is that I post videos every Monday, Wednesday, and Friday, so make sure to tune in for the next one. As always, thank you for watching, and I will see y'all in the next video.